Nirup, when I go and log into my exchange of choice, let that be Kraken, let that be a broker that offers crypto, let that be whoever, there's a lot of things that have to happen under the hood for my dollar transaction to go through and allow me to buy Bitcoin. Now, you have the unenviable task of having to explain a little bit part of what happens under the hood because your company works in this. Tell me a little bit more about what you guys do.
First of all, guys, pleasure to be on here, and thanks for giving me the time to talk about BridgePort, right? Yes, it is an unenviable task, but at the same time, once you understand the inner workings of trading and settlement, it can be exciting to some. I wouldn't say this is what everyone should pursue, but I've been in this space a long time. It's 2 decades now, as of my co-founders, and we think it's an ever evolving thing, especially in the last 10 years when trading has evolved from manually picking up your phone to call your stockbroker to place a trade to just having a website. Now there's high frequency traders. Now we're talking about tokenization. So the space is ever evolving, and we are happy to be part of it and very excited to be building in that space, right? And so your question on what happens under the hood, actually, when you place a trade to buy Bitcoin on your favorite app, it's pretty seamless. And one of the reasons is that you as a retail user had to have deposited funds on the app to be able to buy that Bitcoin, right? So all the exchange is doing is when you place an order, they're first checking whether you have sufficient assets deposited, and after that they let the order go through to the matching engine, which is where buyers and sellers meet, and then that's where the trade happens. And once the trade is confirmed, you now get the asset you bought and you have to pay up the asset you sold, right? So that is very simple for retail. We operate in the institutional space. In the institutional space, where trillions of dollars are traded every day, for instance, in FX, $7 trillion is traded every single day between institutions. In crypto, that number is something like 100x smaller, so somewhere between 50 and 70 billion, especially in today's terms. We're recording this in end of March when the prices are suppressed, the volumes are suppressed. I'd say it's close to like 50 billion a day. So if you want to view crypto as this next major asset class that's sitting alongside fixed income, FX, which is where my background is, then we have to build out the infrastructure that's needed for institutions to come into the space that will bring the next wave of capital. When they bring in the next wave of capital, that's what adds to the liquidity at the exchanges, and that's what allows retail to get better prices, not just on Bitcoin, but perhaps other crypto assets as well. So what you have to do on your favorite app today is not much once you deposit, but we work in the institutional space where they don't want to have to deposit, right? So if you think about an institution with millions of dollars, they don't want to deposit assets on every single exchange. And when they're not trading on any particular exchange, that's debt capital. Debt capital is no ROI, basically. So we enable, as an infrastructure provider, for these institutions to hold their assets at a custodian. And a custodian could be an enterprise custodian, a wallet provider, a bank, any facility that will safeguard their assets. And using BridgePort, they allocate these notional balances on exchanges. And this, if you can imagine, is solving two problems. One is pre-funding, so that when you pre-fund an exchange, you have access to your assets, right? And this is what really enabled FTX collapse to happen. And the second is capital efficiency. If you're pre-funding and you're not trading, that's not efficient, obviously. So you want to optimize your capital by allocating on an exchange or multiple exchanges in milliseconds as the opportunities arise. So that's what we enable. So we're an infrastructure provider for crypto trading institutions, exchanges, and custodians.
All right, let me walk through an example and see if I get it correctly. Let's say I'm a large crypto institution and I'm basically running some sort of arbitrage between institutions. I mean, when I started looking at crypto, you could actually still manually click through and arb things out. Now it's a little bit more complex and competitive than that. But basically, I've noticed as an institution that the price of Bitcoin on exchange A is different to the price of Bitcoin on exchange B. Now, normally, if the distance is wide enough, then what I could do is buy in one exchange and sell on the other. Now, for me to be able to do that, obviously I need to have funds on both exchanges, and this is a bit cumbersome, a bit difficult. So if I understand correctly, what you guys are doing is basically you allow me to deposit money with a custodian, and then you issue what is effectively like some sort of IOU or letter of credit, or I don't know what to call it, to the exchange that says, oh, this institution is good for this much. So when I do buy the Bitcoin and sell it on the other exchange, effectively I can capture at a millisecond level these price arbitrages and effectively, help market make and make my capital be much more capital efficient. Is that more or less how it works?
Spot on. You've got it. So the core tenet of trading is buy low, sell high, right? And that's what you want to do. Doesn't matter what kind of strategy you're running. You want to be able to capture either the spread or the price discrepancy or the price appreciation of a particular asset that you're holding, right? That could be stocks, crypto, fixed income bonds, whatever the case might be. So in the particular example you gave, they're arbitraging between the price discrepancy on one exchange over another exchange. That's typically going to be like market makers, statistical arbitrage type of institutions that are going to be doing that. Whereas the other types of trading firms, such as hedge funds or asset managers, could be doing directionally long. So they might just say, hey, I just want to hold Bitcoin and sell it when it goes up or something like that, right? Simpler strategies, complex strategies, no matter what it is, it all has to do with capital efficiency and safeguarding your assets. And you got it right. So if you're pre-funding on these exchanges, it's not capital efficient because you may have an opportunity on another exchange that you now, unless you have assets on that exchange as well, you need to withdraw from one exchange, put it on another exchange. There's gas fees, there's thresholds which the exchanges put in place to ensure that large amounts aren't withdrawn. There's a time factor, right? So what we enable is, through our setup, it's really interoperability. So in an institution can say, hey, I want to hold my asset at this large custodian, regulated custodian. Okay, great. Put it in there, pledge it for trading, and using BridgePort, just allocate your balance on an exchange or multiple exchanges. And where you said the exchange gives an IOU, that's exactly what it is. It's a credit line saying to this particular institution, BridgePort told me you have 10 Bitcoin locked at this custodian. I will allow you to trade up to that amount. Right, so you can run any strategy that you do on a pre-funded basis using the BridgePort off-exchange settlement setup. And furthermore, you now have greater access to capital, even though you started with the same pot, because you're not pre-funded on multiple places. You can allocate in milliseconds, right? So any strategy in a safer, more efficient, quicker manner is what we really pitch to the trading firms, and it's resonated really well with the institutions, and the exchanges also recognize that this is a way for them to increase their liquidity. So that's one of the reasons they choose to work with us as well.
So how does it work in terms of, let's say I've got, I don't know, what's the minimum ticket for me to be able to work with you guys? I'm assuming it's in the order of magnitude of millions, right?
In my previous life, when I was in FX and fixed income, yes, the minimum ticket was $1 million, because that was a wholesale market. That's where HFTs and banks came and met. In crypto, because it's a very small asset class, I know that for those who operate and live in crypto every day, you don't want to think of ourselves as small, even though we do say it's early. We are very small compared to where FX is, right? 30, 40-year-old mature trading asset class, right? So because we're a small asset class, the average trade sizes on some of these exchanges are just in like thousands, right? I mean, but that's not where institutions trade. Institutions trade at larger trade sizes. We don't dictate the trade size. That's dictated by the exchange. If the trading firm is trading on exchange. Now, another execution modality we haven't spoken about is OTC. In OTC is where two trading firms may bilaterally meet each other. In that case, they may say to each other, "Hey, I just want to do trade sizes 100,000 and above," right? So, yeah, trade sizes are going to be an important part of crypto as the asset class matures. And for retail, it'll always be in the small hundreds to thousands, right? For institutional, where collectively as an industry we want to get to is get a minimum size of 1 million, and that's when we know the asset class has matured.
Okay, so let's assume I have $1 million and I run my own little prop shop where, to continue the previous example, I arbitrage the price of a meme coin across exchanges. So I come to you guys and say, hey, I'm tired of sending my money here and there. It's not capital efficient. I could make a lot more money if I had funds immediately wherever I needed them, etc. So I give you guys $1 million, which is not entirely true. I deposit $1 million with a qualified custodian, and then you help me, access credit lines across various different exchanges. So, what I'm curious about is, do I then have to negotiate with every single exchange that you guys support to get the credit line and say, hey, I have, this platform, this backing, everything set up? Or does that come out of the box? Like, who's making the risk decisions there? Is it you guys? Is it the exchanges? How does that work?
Yeah, in the first phase, it's going to be the trading firm needs to have an account with the exchange. The exchange needs to acknowledge that this trading firm can execute based on assets pledged at this custodian, right? So that is that is an arrangement that the exchange, the trading firm, the custodian all enter before they start using BridgePort, right?
Got it.
Eventually, we want to get to a place where it's out of the box. The trading firm comes to us and says, "Hey, I want to trade on these exchanges. Hook me up." And where that can come into place is when we start looking at prime brokers entering the space, right? So, to those who aren't familiar, prime brokers allow two things to happen for trading firms. One is access to markets. Another one is leverage or credit, right? So the way that happens is a prime broker will say, okay, I can give you access to all of these exchanges. You just send your orders through me, or you just trade on the exchange, and the prime exchange knows that I'm a prime broker. Or the second thing I mentioned is credit, which all capital markets, all traded assets need to run on credit. That's how we get to 7 trillion in FX. It's not everyone just pre-funding each other and trading, right? So in phase 2 and 3, that's what we're aiming for. One stop out of the box where the trading firms get access to exchanges.
Okay, so maybe this is a naive question, but let's say, what stops me from pledging $1 million and then going to 10 different exchanges and opening $1 million position on each of them, goes wrong, and then all of a sudden I've pledged $1 million to 10 different people? Are there safeguards in place against this?
Yeah, it's actually a valid question. You have $1 million pledged at a custodian. That means that $1 million cannot be double allocated and withdrawn while it's being pledged. So an exchange will check with BridgePort what is the amount that is available or pledged at the custodian. Once we say $1 million is taken up, the other exchanges also know that, okay, this trading firm does not have sufficient amount to come and get credit from the exchange. Yeah, there's definitely safeguards. This is a fundamental control that is built in from the ground up at BridgePort.
So I can't really pledge the same amount in two different places. There's the custodian's notified, you guys are notified, everyone hears about it. I mean, as you mentioned, this was one of the big issues with FTX, right? A bunch of institutions funded their accounts in FTX and they thought they were making a tremendous amount of money. It turns out they weren't. In fact, they ended up losing money very often. And presumably you help institutions be a little bit more confident in
Yeah.
their trades because the exchanges can't, blow up with them.
If you think about why that pre-funding model is in place, it's because when crypto first started 15 years ago, and the only way to buy and sell crypto was to trade on, say, an exchange like Mt. Gox. And it wasn't a sophisticated offering, right? You had to send some dollars, and then once they received the dollars, they would allow you to trade the crypto. And so that is the pre-funding concept that existed for the last 15 years that hasn't been removed until recent times when that model was tested, mainly through the FTX implosion. And yeah, traders could have been making money, but unfortunately their money wasn't secured and segregated, so it was inadvertently or nefariously taken up by the exchange, right? So we've learned lessons from that, and that's what really spurred the confidence in the BridgePort team to build this infrastructure, because we know the next wave of capital that's going to come from TradFi asset managers and hedge funds will not pre-fund. And in fact, some in the US cannot pre-fund because of regulations, right? So they have to hold their assets with the qualified custodian and so on. Put those qualifiers in place, how can crypto scale? It can't scale if the only way exchanges allow for trading to happen is through pre-funding. So to the credit of a lot of these exchanges, they have progressively built out off-exchange settlement setup, whether directly to some custodians or try to segregate assets with their own custodian. The market is learning that to attract institutions, we need to be in a better place than what crypto was initially, and in line with other asset classes. And for those who have evangelists of crypto and think crypto was supposed to be disconnected from in the institutional space, that could be a good ethos to have. But if you care about liquidity and price appreciation, that only comes from new capital entering the space, and we can't stop that from happening no matter what your view is on Bitcoin or Ethereum or whatever the case is in relation to fiat. That new capital wants to enter the space, so we have to build an infrastructure that's needed for them, and so another collapse like FTX cannot happen.
Got it. What venues do you guys serve already? Like where is it? Where can your clients access the markets?
Yeah, so we've made a number of public announcements recently. We made an announcement with 360T, which is a institutional ECN. ECN is an electronic communications network. Not to get bore people with this, but ECNs are where a lot of the trading happens in equities and FX and so on, right? So they're bringing the ECN for crypto, and this will be one form of execution, which is away from exchanges. And 360T is owned by Deutsche Börse, which is a large German exchange and clearinghouse. I think their market cap is like 75 billion. So this is already a testament that the institutions are coming. In fact, they are here. Now we need to allow them to flourish. So, and then over the coming weeks, we have a number of announcements coming up with exchanges. 2 top 5 exchanges are working with us, and we're building into 5 other exchanges. Unfortunately, I can't list them out just yet, but with times, the coming weeks, we'll be making these announcements. And yeah, we're very excited. We've gotten a tremendous amount of positive feedback from trading firms who are looking to optimize their capital using BridgePort, the custodians and the exchanges we're connected to. So exciting times ahead, even though the prices are depressed. I think the infrastructures that are being built now will allow for the next wave and the cycle to climb steeply.
Yeah, that's a theme that keeps coming up in conversations that I have. Although prices are depressed, actually behind the scenes, there's a ton of things going on that people often don't appreciate. And you really are seeing this whole institutionalization of crypto that people were always hoping to see. Another thing that keeps coming up very often in conversations, and I found through your materials, is AI. Now, I've heard that you guys also have something in the works, or something that you've already launched in the AI space. Can you tell me a little bit more about that?
Yeah, one of the common questions we get when we mention about capital efficiency is if there's a way to quantify that. So if you're in your example where you had 1 million and let's say you put 200,000 across 5 exchanges, would you have done better if you had that million allocated efficiently as the opportunities arise, as opposed to just parking the asset and trading whenever, right? So what is that amount that you would have saved or made? So what we've built is initially an AI chatbot that will allow a trader to assess the quality of execution across exchanges. So if you want to know where Bitcoin had the most liquidity at 2 a.m. in Asian-based exchanges, then that's something you can naturally chat with on our AI agent named Bridget. What we're going to be releasing very soon in the next couple of weeks is the next step to that, which will quantify how much you would have saved or made in profit had you allocated your assets efficiently across the exchanges that had the best liquidity or the best bid-ask spread or the best or the least amount of slippage, right? Whatever the metric that you care about, whatever strategy you're using, you can implement that into our what we call the BridgePort Opportunity Index calculator, and it will show you what you have saved. And this is information that you as a trader can then use to then implement the next strategy that you're going to face, right? And then so we've got something like 40 gigabytes worth of data that we use. We've trained, we're using AI extensively to generate the output that the traders we think will find very useful.
So how does that look like if I'm a trader? I basically plug in via some API and you guys tell me how much money I left on the table. Is that roughly what it looks like?
Yeah, it's in fact easier than that. It's going to be a publicly available website, analytics.bridgeportmq.com, where you can go in there and obviously as a free to use member, there's limited amount of credits that you get to generate queries and questions. So just put in your parameters, what strategy you're running, how much capital you have, and then what asset, and then we'll go through the permutations and calculate the amount that you could have created, right, or saved. Essentially, think of it as a equivalent of like a mortgage interest calculator.
Calculator, yeah.
Yeah, so that's what we're basing it on. So you want to get a score of your efficiency based on your utilization.
Yeah, and hopefully that ends up being an excellent sales tool as well.
Yeah, that's exactly what it's meant to be. Yeah.
Nirup, is there something we haven't covered so far in the conversation that you think we should definitely discuss?
I think we've covered the main topics, right? I think for those who are deeply involved in the crypto space at an institutional level, we'd love to talk to you about your trading needs, your settlement options, and those who are, say, viewers that are in the retail space. I think it's important to acknowledge that institutions coming into will only benefit crypto price appreciation and crypto use cases. We've already seen I think if you went to any crypto conference, there's no shortage of them in crypto at all, as you know. The stablecoins was the featured hero over the last year. So that's a use case that cannot be ignored. So we're working in the stablecoin space as well, though we'll have a product out there shortly. But yeah, there's lots of use cases, lots of reasons for institutions to enter this space, and I'm very excited to be building here. And I think the next year is going to be amazing for the crypto industry as a whole.
I've got one last question for you, because you have to explain such a difficult topic at times. What's the biggest misconception that people have with regards to your work?
For those in the US, when I draw this analogy, it immediately resonates. BridgePort is the plaid for crypto. Mm-hmm. Anyone that's used Venmo or the Cash App, when you try to connect your bank account to Venmo, that's done through Plaid, right? So Plaid is that middleware that's connecting fintech payment providers to bank accounts. BridgePort is that middleware that's connecting exchanges to custodians. And what does any middleware do? It sends messages from one endpoint to another, and that's what we're doing, right? We're communicating, or rather we're the coordination layer between exchanges and custodians, so they have an accurate picture of the assets that are pledged and the trades that have happened to enable execution and settlement. So yeah, it becomes very easy when I draw Plaid as an analogy. Once we get out of the US, because the banking system's actually more efficient in places like Brazil, India, and so on, with the latest set of rollouts, the analogies tend to like waver a little, but I think people generally get what the downsides of pre-funding is and what the upsides
Yeah.
of capital efficiency is. So yeah, if I can't get it within the first 5 seconds, usually I need 30 seconds for it to resonate.
Excellent. All right. Thank you very much for your time.
It's been a pleasure, but